Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 5th, 2022. It is 3:46 Eastern Time, so we have a little under 15 minutes to go before the close. And I figured I'd do another video. Now, what I'm going to do in this one is cover the other indexes, we'll call them, SPY, IWM, but I also want to give you just some pretty concrete targets, longer-term swing targets on the Qs, and that is because I know I'm an active trader. I wear different hats. I wear active trader hat, sometimes day trader, also sometimes trend trader / investor. It all depends on which accounts I'm in, whether it's a long-term IRA kind of stuff or active trading account, and of course market conditions as well. So what I'll do is lay out some pretty simple swing targets on the Qs, and as I go over the SPY and IWM, maybe I'll give you some targets there as well. All right, here's what's happened today. Okay, the Fed came out, and Powell continues to be in 180 mode. After stubbornly, insisting that inflation was transitory. As we all know, he's more recently, he and the Fed have shifted towards a more hawkish stance, and so the minutes were released in the FOMC meeting today, and for the life of me, I mean, other than the fact I get that the Santa rally, 80% of the time stocks do rally during that low volume period last week of the year and first couple days of the year, but for the life of me, I can't understand how we didn't see more selling before there. All the institutions and individuals, I mean, the writing was on the wall, but now it seems they're all taking heed. Hey, time to get out of the market. He's really not bluffing. He's really starting to move, towards the hawkish stance. And so I want to do this video to continue to warn of the potential risk for a rush for the exits. And I've talked about that for quite a while, and because it doesn't happen doesn't mean we're not going to get it. So the takeaway from this, number one, is just don't underestimate at any point in time, but most particularly when market conditions are at extremes like now, do not underestimate just how far and fast the stock market or an individual stock can fall. So that's it. So don't be surprised. I'm going to give you some pretty aggressive targets here, and don't be surprised if we hit them in a matter of weeks or just a couple months. All right, so I'm going to start out here on SPY on the 60-minute chart and show you what's happened. So we had these previous highs right there, which were popped recently, and that was a failed breakout. As I often say, breakouts that occur while overbought and with negative divergence, as we had here. Simple stuff. Again, I don't, I guess I was going to say I don't see who takes the breakouts. I don't understand, but I guess they don't, they don't see charts the way I do. And so that breakout failed. We had cleared two distinct highs, broke out. It also occurred, during that low volume week. Again, seasonally bullish week, and technically it has failed. Now we're just in there, sure, that's a big level I had at 470.69, but the more we move down, the more it will become clear and apparent to all that the breakout has failed, and that then becomes a false breakout, aka bull trap. And those things are pretty powerful, because usually when you get rejected, fall back into a trading range, the next stop is usually the bottom, just like these two rejections off the top of the range took us down to the bottom. So if you want a very near-term target, the breakout is in play as of now, and that takes us down to the bottom of the range still, despite the 1.66% drop so far today. It gives us about another almost 4% to get there. And again, that's just 60-minute chart. These 60-minute charts are good for active traders, swing traders, trades that last a few days to a few weeks, and get in, get out, divergent low, get long, divergent high, get short. Not that simple, but use the other technical developments such as breakouts and breakdowns. SPY daily chart. One of the things you'll be watching for, well, there's that range right there, right? Nice and clear, well defined. And this was the previous breakout tall high. So this breakout above this previous high is still intact, right? We already came in and we back tested it a couple times right there and there. And so that is a big level. So call it about, to be safe, round down to about that 450 level, if and when that goes. And again, based on these divergences, I think it will. So my target's pretty aggressive at this time. Let me just jump over to the weekly chart and just show you as a swing trader. Again, I don't trade the SPY. I'm going for beta right now. The crowded trade is tech stocks, the beloved FANG stocks. and I'm going to get a lot more bang for my buck, I believe, shorting the Nasdaq 100, which you usually do, than the S&P 500, which is diluted with defensive issues, utilities, REITs, high dividend paying stocks, things that tend to fall less when things get ugly. But there it is. You want to see targets, I'd say 426.32 down to 415.51. That's a nice target range. And if so, from the recent highs, that takes us, that'd be a drop in the S&P about 11 down to about 12, almost 13%. And that's just near-term targets. Ultimately, I think we can work our way down here to this level here, 354. That's about a 25-26% drop. So again, that's SPY. I'm going to loop over now to the small caps. Then we'll dig into my preferred trading vehicle. I like these, by the way. I like the small caps. I think they have a lot to fall as well. So that and NQ or QQQ, those are my two preferred indexes to trade at this point in time. Where are we going? Well, I've maintained this target for a while, about 171. I think that's where we go, and all we need to do is take out the recent lows, the bottom of this trading range, which, let me move that line down. I don't know where it got moved there. There it is, about 209. So you want to set a price alert on 209. That should do the trick, a solid break there. Why would I be more apt to wait for a break of 209 than to buy it for a run up to the next highs? You can do that. Again, I give you these levels. I'm going to be right or wrong on where I think we're going, but where my skill set lies a lot is, I think, in identifying key price levels that will act as support and resistance. So again, a bull can buy a pullback to 209. You had dozens of opportunities to do it in the last year or so, and each time we hit it, not each and every time, but most of those times, you rallied to the top of that range, and that was about 12.5%. So you could have, and you can do it in reverse. But what happened, again, this formulates my longer term bias, is we had a breakout. And again, so the bulls saw a breakout to all-time highs. It was a big green candle on volume, everything that a bull wants to see on a breakout, except me, because I don't like to see it a breakout with negative divergence, big divergence. That tells me that breakout's likely to fail, and it did. And it came down all the way back down to the range from the false failed breakout. That dropped was about it was a 15% drop in IWM. And because of that, because we're just freshly coming off that big divergent high, I think sooner or later that level's going to go. But again, hasn't gone yet, so you can't go crazy all in short on the small caps. You could if you want. I mean, if you think it's going to happen, sometimes I'll anticipate something before it actually does. Just set your stops wherever you want. No more than much above that. PPO is still bullish. It's above the zero line right here. See that? The only time you're in a confirmed bear trend is when that white line is below, as it was there to there, and then here to here during the COVID drop. But that's something else we'll look for. See that drop below there. So 209, magic number, and the PPO is solid drop below there. And again, I think it happens. And so we've got from where we're at right now today, if you wanted to throw out if you're already short, let's just say, you've got about 22% downside to my target there. So let me just write that in. I've covered this one for a while now, 171-ish. I'll look at the daily chart. It should roughly align with that. Okay, so that's a swing target. That is for those that want to just grab some IWM short, or you can do, they have, what is it? Gosh, there's several inverse ETFs, and some are leveraged, some are non-leveraged. TWM is 2 times short. TZA, I think, is 3 times short. And then there's just a one-time non-leveraged short. I'm drawing a blank right now for IWM. But let's move on. Let's go to the daily chart. And that's it. I mean, it's just such a well-defined trading range. Look at that. And that's, again, I always talk about these are, I liken these to coiled springs. It's like a coiled spring building energy. The longer you bounce in a range like that on a security, it's been my experience that once you finally have a definitive break, unless it's a false break, definitive break in either direction, it can lead to the next tradable trend, a powerful trend, a big move. And so I think it's going to be to the downside. Here I have it about 208.50, and there's that 170-ish level right there, 170 target. So that's IWM. Not much else to say on that. On the daily chart, we do have the PPO down below the zero line right there. You can see it's already turned down. It's bouncing down below it. Remember, we've been in a trading range, so trend indicators, I always say this, they don't work as well when you're in a trading range because you tend to move through, things are whippy, but it is what it is. It's below there. Just want to mention that. And now on to the good stuff, QQQ. Let's start with the futures, NQ. This is it again. Been bouncing around, grinding around for a while now, sideways. And most recent sell signal was this break of this trend line here during the holidays. We had a breakdown and another rejection there. And so far, we had a little flagging action today. FOMC minutes came out, and nothing but selling since. And I don't see anything really coming into play. The only thing I've done different to this chart is added a level here. Before I had the line at 15,553. Upon further analysis, I'm looking here, we had a reaction low there and some reaction highs there. So that's now the magic number that really needs to give way to open the door to a, kind of we'll call like a bloodbath sell-off. Much bigger drop. And no divergence, not even anything remotely resembling positive divergence right now. So I see no reason to cover any shorts today. In fact, I added shorts today, and I'll continue to build into those positions because I'm going to get to the long-term charts for it. Let's just do that now. Let's jump into the charts, daily and weekly. All right, QQQ. Keep it very simple. All right, if all this nitty-gritty 60-minute micro levels, bounce levels, areas, support levels we're likely to bounce, if that's not your cup of tea, you want to put a short on, or you're already short and you want to know where to cover, where we're likely going to have a tradable bounce, it's right here. Target zone runs from about 342.50, 342.40 down to 335.50. That's where I think we go, especially if and when we break that level I told you before, this uptrend line right here and the bottom of the recent trading range. Again, that's that yellow line, about 377.64. So that is your swing target, and that is going to constitute a drop of, from the highs there, that's going to be a correction of about 16 to 18% in the Nasdaq. Now, we'll get a little bit granular. What I think will happen, I think we're going to shoot down. We'll have a lot of downside velocity if I'm right. Again, if we break those levels, start to get that panic rush for the exit selling, I'll probably overshoot the 342 level that day, maybe the next, come down to around 335 and change, and then park back on it. And when we close there, especially I'll be looking for any type of reversal candle. That's where I'll probably be covering my shorts and going long for a bounce trade back up to at least to about 360 right there. So that would be a nice trade, from the top, swing down, make 17%, and then cover there. Again, depending on how the charts look. So please keep that in mind. Charts may look like death if we even get there at all. And we could slice right through there like a hot knife through butter. I've seen it happen before. Or this may be a one-day wonder. So we'll see. Right now, it looks as good as it could get for today. Down 3% on the Qs. And by the way, that reversal trade would be good for about a 7.4% bounce if we bounce it back up to that level. And again, we'll let the charts be our guides at the time, 60-minute chart, daily, everything else. On a weekly chart, here's I already gave you before my if things get ugly target on the futures. Let me go back there just in case, because I know sometimes there's the closing bell. We get some new people coming in the site. My if things get ugly target, I think I have it on this board right here. No, I guess when the futures rolled, I didn't replicate that target. It's down lower. Or no, maybe that was it back then. Yeah, okay, things have already started to get ugly, but I'll have an additional target down here for you. I'll revisit this futures chart. Let me go back to the weekly chart and then I'll wrap it up here. QQQ for swing traders. Here's where I think we're going to go. T1, and these are rough numbers. It's a weekly chart. You always want to cover a little bit above support, but here's how I think this thing plays out. And this is measured from the highs. 16% drop down to T1. Bounce there, about 342 or so. And then next drop down to about 299, we'll call it 300. That would be a 27% drop. And then finally a drop down here to my current final target, which is T3, and that's either this 268-ish support right here. We have some support there, but I also have these long-term trend lines coming into play. And I probably should add T4, potential T4. That would be about 235.33. I didn't measure that down here. I'll do that for you. That's if things get really ugly this year. That'd be about a 42% drop. Pretty aggressive, but look, all it's going to do if we did that is keeps us in a. It'll be called a bear market, but it'll still be a larger secular bull market right there, and it would only take us back to the bull market uptrend line, right? I like this one better. I like that upper trend line at this point in time, but I do have this alternative trend line that comes in lower. So let's just maintain these targets for now. Look, we're not even close to the first one, so I can always add or delete. And I'll tell you if I see something, if we happen to get to T1 or T2, we happen to get there, I may eliminate T3 or could extend targets. We'll see. Either way, those are the levels. And look, the day we just had the closing bell. All this is a pullback to support. So if all this bear speak drives you crazy and you're bullish, well, there it is. You have a pullback to a primary trend line, or not the primary, but a secondary, a major trend line that goes back to 2020 on QQQ, and you can go long there. I can't make a strong case, especially coming off the heels of these divergence, and you can see a little more downside left. I like to wait I would at least wait to see some bullish divergence on the 60-minute chart before positioning for the next leg up, if that's what you're looking for, to new highs. So as of now, I think there's more downside at least through this week, down to 378.44 right there. That's the former T2, which was already hit once, remember, and twice actually. We hit it twice. So that would be at minimum. I think we're going to go here before the next bounce. And I still have T3, T4, and T5 from all the way back here that have yet to be hit. So that's 352. So if T5 is hit, again, it could be pretty quick. Maybe not. But if it's hit, that's going to be about another, from where we closed today, about 8.5% drop. All right, so those are your levels. We'll wrap it up here. Keep this one short. This has been Randy Finney with Right Side of the Chart. Have a great day.